Welcome back to Stock Market Mindset with Slick the Trader. Today we're going to recap the S&P 500 on 1230, where we had a pre-market gap down and basically a gap fill at the end of the day with a breakout and retest. Let's get into it. It's the morning sell-off, market open. Big drop, quick up, resistance, broke through resistance, dropped to yesterday's low. Rejecting pre-market low. Broke back over resistance. Push for daily highs, rejected. And when we enter right here, we're going to enter a chop zone, but pay attention to these circles where these arrows are. Right here is you're going to show it starts to build support. Can't break through. Support. Broke through. Rejected. Just couldn't get down. Demand area. Back over. Broke through support. Held. Still resisted pre-market lows. Chop zone. Chop, chop, chop. It's what you call a base drop. Just coming up. Then we go into a falling wedge. This is how you use supply and demand and patterns together. Big wake up, rejected right there where that arrow's at. Still holding pre-market lows. Break through pre-market lows, which is a key level. Break through that support area we had down into a demand. Wick back up. That key level was a daily low. Rejected. That trend line that I drew on a 1 hour chart. So what I'm gonna show you here is how when it breaks back up and breaks out, how it retests that support area, that green line. And that's where you want to take your entry at, right there where so resistance becomes support, retest, and breaks out. That's how you gain confirmation. Boom. You can see it breaks out of that falling wedge, that chop area, that accumulation, breaks up, breaks down. Boom, I take an entry. All right, that's one place to take profit, a key level. It's another place to take profit, it's a key level. Now we got highs, and if you notice, you filled that gap. Mind you, this is the S&P 500, so you still could be able to trade this up to 15 minutes after market close. And I'm completely out. As you can see, 100% success rate, $15 profit. Obviously, if these was options, it would have been probably hundreds or thousands of dollars. And thanks for watching this video. I just gave you a quick review on today's S&P 500 trade on the SPY. Basically how gaps seem to be lately been getting filled same day. How most gaps get filled in the market. Like you said, normally we had a gap down. We didn't do much movement the whole day. I mean, it literally dropped and we just chopped around in this range, maybe like a $3 range. We finally, based down here at this key level pre-market low, broke out. I drew some trend lines. It's basically just like a falling wedge. It based, boom, broke out, retested, broke out again. And even in the pre-market, kind of based into this little flag, which means we might have a nice leg up next market open, which is after the new year. Because as you can see here, we got a base right here. I mean, if you really look at this, it's almost like a inverse head and shoulder. Boom, 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 boom. We break this. Basically, we break this pre-market high from today, and then we break yesterday's, we pretty much got room up to this, 385 area. But something I also want to show you is volume gaps. How, if you notice, you got these volume gaps. And that's when you got those big engulfing candles. See a base, big engulfing candle. Then you had consolidation all in this area. Basically base, broke out, big engulfing candle. That's how you use the volume profile. And you can find VP gaps. Thanks for watching.